Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to the airwaves of the Voice of the Cape. You've just tuned in on 91.3 FM stereo, 89.8, 90.9, 95.8, as well as www.vcfm.co.za. That's on the Voice of the Cape. But if you're catching us on Facebook and YouTube, we're streaming live on both platforms today, and that is, of course, our matric revision program. We have our special guest, Faisal Ibrahim, who joins us once again. Faisal, assalamu alaikum and welcome.
Walaikum salam wa rahmatullahi wa barakatuh. Fasih, hope everybody is well today and hope that we all have our thinking caps on regarding our matric uh, paper that we'll be covering today. So, if we look at the matric paper, question paper November 2016, question 5, the Department of Basic Education's paper. This paper can also be found on the Department of Basic Education's website for absolutely free. So just a few tips again. So I hope everybody is back at school already, or basically ending the short term for and going on to your study break and actually utilizing your time to study. Previously, when I was giving a lesson, I did mention that it is very important that we understand the principles and the concept regarding the subjects in general, and especially when we're working on a subject such as or subject regarding numbers, such as accounting, maths, economics, physics, etc., etc. We should understand the principle and the concept that the question is trying to bring across to us. So today, in today's lesson, we will be focusing on inventory valuation. And with regard to inventory valuation, the inventory valuation specifically asks us, and the method within the inventory valuation is the specific identification method that we will be focusing on. So just a brief overview of inventory valuation. When we do inventory valuation, we work on three types of methods. We work on a weighted average method, a first in first out method, and a specific identification method. So in today's paper, we'll be covering specifically the specific identification method, but as the weeks go on and as I have more sessions, I will then focus or do a question on the first in first out or the weighted average method. Okay, so let's get into this specific question. So when we look at inventory valuation, what we are doing is we are valuing specific we are valuing the inventory that the company has at financial year end using the specific methods. To be honest with you, this is not the, I would say, not the complicated section in the paper. This is the quick section, the one where I normally call it's the bread and butter marks where we should get quick. Okay. So let's look at what the question is asking us. Let's look at what the question is asking us. So November 2016, question 5, Department of Basic Education, question paper says the following. 5.1 Inventory Valuation. Matrix traders sell three different types of laptops: a Lexus, a Granite, and a Vision. They use the periodic inventory system and the specific identification method to value the stock. Now, very important. The next one says 5.1.1 explain the following valuation methods. Now, people in a paper, they will not necessarily maybe ask you to calculate the inventory using a specific valuation method, but they can also ask you a theoretical question that you have to know when calculating the specific well, when calculating the closing stock using the specific valuation method. So the first thing is, let's explain it. What does FIFO mean? FIFO means first in first out, right? So in other words, it will be assumed that the items that you are buying first, you will be selling first, right? So that means first in first out. Type of industries or type of businesses that make use of these type of methods is people or businesses or companies that sell fresh produce or food type items, or items that has a very limited shelf life. Such as, I always tell my students, the example I always use is bread, or this the famous takeaway outlet that we always go to is McDonald's, you would assume, or they would have to use first in first out, because the items that they sell first, or the items that they purchase first, needs to be sold first, in a sense that if it's not in that case, they will be then selling old item or obsolete items, and nobody wants to buy an old bread or get an old burger from McDonald's, etc., etc. So the type of industries that would use the first in first out method for valuating the inventory will be items that has a very limited shelf life. So your answer that you can give there is basically the first in first out method assumes that the products that are bought first. So we can say here, if we write down here, we can say the 5.1 bullet 1, first in first out. We can say there that items that are purchased first are assumed to be sold first, are assumed to be sold first. And that is very important when doing that. Very important understanding how it works. The next thing is a specific identification method. So a specific identification method is basically, it is valuing a inventory or valuing specific inventory based on its actual cost, based on the actual cost of that specific item. Therefore, it's named the specific identification method. Now, specific identification are more used on high value items, such as um, cars, watches, laptops, motorbikes, etc. Stuff that have a high value. Jewelry, rings, whatever, or cell phones, whatever has a high value item. So you will associate the cost of the product, or you will associate the specific product's cost to the actual price that you've purchased it. So let's see what we can say here. So we can write down here specific identification method. Identification method. And the specific identification would be each item of stock is valued at its original cost. So we'd say here that the stock item will be valued at its original cost. So matriculants and students, that's a bit of theory regarding first in first out and specific identification. I'm also going to give you an overview of the weighted average method. So the weighted average method is basically valuing in that way, with the weighted average method, you value stock that is similar in nature, and then you average it out and use the weighted average method when doing that. Okay, so if we go further and we look at the 5.1.2, so let's just number this here. This will be 5.1.1, and that's all that. Then we get 5.1.2. 5.1.2. Let's take the eraser, erase this unnecessary lines. Okay, so what we'll do now is the questions asking us calculate the cost price per laptop on hand on the 1st of October 2015. The question is asking us, people, we need to know, they want to know what is the cost price per laptop, what is the unit cost price of the laptop at the beginning of the financial year regarding for the specific company. So the first thing I need to find out, I know, or what you studied during the year, you know that in order to work out a unit price, we will need to take what is the total cost divided by the total units, the amount of units. So it's the total cost divided by the amount of units. So if we go look in our question paper, we'll see here the following. Okay, so on the 1st of October 2015, I had Lexus model. So it says there, so I had a Lexus model. I had 118 units and my total cost was 413. Okay, so what we do now is what we need to calculate is what is the unit price per laptop, or yeah, per laptop. So what we'll do now is we'll put our variables basically in the formula that I wrote down there, and we'll say that I've got 413,000 rand divided by 118 laptops that I've got. I take out my calculator. I then put the numbers in my calculator, and it will say that 1413 divided by 118, and then I will get a cost of 3,500 rand per laptop, or per unit, per laptop. Matriculants, very important. These are the easy stuff. These are the stuff that we need to get right. Okay, the next part. When we're looking at 5.1.3, 5.1.3 asks us the following. Let's just rule a line here to create a division between our questions. 5.1.3. Okay. Calculate the value of the closing stock on the 30th of September 2016. So we need to use a specific identification method to calculate the value of the closing stock at the end of the financial year. Now, let me give you a tip regarding whenever, so what I've noticed is in papers, whenever they're asking to calculate a closing stock using the specific identification method, they do not give you the closing stock, but rather expect you to calculate what the closing stock is. Okay. So so first of all, the trick here is we first need to calculate what is the closing stock. So what I'll do is I'll set up my questions as follows. First of all, I know that I have an opening balance. I have Lexus. Okay, so we've got Lexus. So what I like to do is I'll put Lexus over here. Okay, I'll have what's my opening balance plus what I purchased minus what I returned minus what I sold will give me what's left over, will give me a closing balance. Okay, so if we go now, we'll say the following. Let's look at the Lexus brand first. We'll do one brand at a time. So the first one is Lexus. So on my Lexus, I've got an opening balance of 118 units. So on Lexus, 118 units. Plus, I've purchased zero, because nowhere in the question here does it tell me that I've purchased anything. It only tells me that I've purchased Granite Vision, and it tells me that I've returned Vision items. Right? I've returned Vision brand, and I've only purchased Granite, the Granite brand, and the Vision brand. Okay, so let's go on. So I've also returned nothing. And then what I've sold is, I can go see what I've sold. Lexus over here. I've sold that amount of 118 units. So basically I sold everything. Okay, so if we go here, we say minus 118, and that will leave me with a closing balance of zero. So my Lexus closing balance is therefore zero. Okay, let's look at the next one. So let's look at the next one. So people, the same principle that I apply to the Lexus brand is what I'm now going to apply to the Granite brand and the Vision brand. So our principle remains the same. Remember what I told you? It's all about principle here. We need to understand what we're doing. So the next brand that we're going to be doing is the Granite. So let's put up here Granite. I've got an opening balance of 0. I purchased. Let's go look how much I purchased. So you can see here, let's take another color, let's highlight it. So by the Granite on the 10th, in December 2015, we purchased 410 units. So we'll write here, get my pen, we'll write here 410 units. I returned nothing and I sold 356, and that leaves me with a closing balance of 410 minus 356, and that is 54. And now we can say here 54. Okay, then what we need to do now is we need to go and calculate what is 54 multiplied by the number of the cost price of my units, which is 3,750. So now I say 3,750. I then take out my calculator. I'll say 54 times 3,750, and I get 168,750 as my closing balance for Granite. 168,750. 168,750. So let's go check that. We've got 168,750. Then the same principle I apply to the next one, Vision. But now in Vision, I had a return of 20 units. So again, we write down here Vision, no opening balance plus 630. So we've got here 630 minus 20 units minus what I sold of 502. So let's go again. My opening balance is 0. I'll put in my calculator 630 minus 20 minus 502. And then I have 108 units closing balance. So I've got 108 units. And then I multiply this by the cost price, which was 4,650. 4,650. And then 4,650, if you multiply the two, take out your calculator, 108 times 4,650, and you get 502, 200. 502, 200. Let's just confirm that amount again on my calculator, 502, 200. So people, by this time, we've now calculated what is the closing stock of all the individual items, such as the Lexus, the Granite, and the Vision. However, people have not answered the question yet. We want to know what is the total. So what we're going to have to say now is 168,750 plus 502, 200, and that will then be equal to, take out our calculator, 168,750 plus 502, 200, and then that will give me the total of, let's just see here, let's see if we get the total. So let's just do our calculations again. We might have made a mistake. So let's check. Okay, so we've got 54 times 3750. That's a mistake we made. Sorry, people. There's a calculation issue here. So the principle is right. There's no mistake in principle. It's just I typed it wrong on my calculator. So this amount here should actually be, let's check. This should actually be 202,500. 202,500. And then we have to erase the part here also. 202,500. And then if we take out our calculator again, we'll say 202 500 plus 502 200, and then we should get a value for closing stock, which is 704 700, and that is 100% correct. 704 700 people, and that is my interpretation and explanation of the specific identification method regarding the valuation of inventory from question paper 2016, question 5, from the Department of Basic Education. This can be found on their website as well. If you guys want to do additional questions, all the papers for the past 6-7 years is on the website, if not more. Okay, so basically that is regarding the the questions in for inventory valuation. The next question that I want to touch on is VAT, value added tax. So if you have any questions regarding this specific question or explanation, I don't know, if you're most welcome to probably put it in the comment box or whatever the case is, and then I'll see if I can answer your questions or something in that regard. Okay, so the next part of the question, or 2.2, that we're quickly going to do is value added tax, VAT. So this question also comes out of the same question paper 2016, the November question paper, but it is question 5 from the Department of Basic Education's website. You can go find it there. So in 2016, so we all know that we had a VAT change on the 1st of April 2018. The VAT changed from 14% to 15%. So in 2016, when this paper was written, it would have still been at 14%. But it doesn't matter whether VAT was at 15 or 14%, because it's not the percentage that I want to teach. It is the principle and understanding of how to calculate the VAT and how to draw up a VAT control account that is very important. So let's go into the question and read what they are saying over here. 2.2 says the following. The information below relates to Creamline traders for the 2-month VAT period ended on 31st of August 2016. All items are subject to 14% VAT. So your paper that you'll be writing at the end of this year, the VAT is actually 15%. But like I said, for the purpose and calculations of this question, we'll be using 14%. But I want you to focus on the principle and not necessarily the VAT percentage. Okay, the next part says the following. Calculate the amount receivable from or payable to SARS um, for VAT on the 31st of August 2016. Indicate whether this amount is receivable or payable. So people, you need to answer the question. You need to indicate at the end, is this amount receivable or is this amount payable to SARS? So you're going to need to answer that specific question at the end of. So you need to do the calculation, then based on your calculation, you need to determine, is it receivable or is it payable to SARS. Okay, so let's look at it. First of all, I start off with a VAT control account. Matriculants, grade 12s, if grade 11s are listening to this, when a tip about VAT, whenever I'm asked to draw up or to calculate whether it is receivable or payable, I will always draw up a VAT control account. It is the most easiest way to do it, VAT control. And we know that this side is debit and this side is credit. And we also know that the input tax is this side and output tax is on this side. Okay, so why do we put input tax and output tax? Now, I want to teach you something regarding a VAT control account. When we're looking at the transactions that go into a VAT control account, we need to always ask ourselves the following: in which way is the goods flowing? Right? If the goods is flowing into the business, I put it on my input side, on my debit side. If the goods is flowing out of the business, I put it on my output side. Or, so it's that one, or we need to look at what was the originating transaction. So I'm going to go through this few VAT items now and show you how we're going to apply the principle or the rule that I've established when we can calculate a VAT control account. So the first thing we're going to do is you always put in your opening balance. It says there, amount owed to SARS. Owed to SARS. So if we owe something to SARS, it becomes a liability. So therefore, we will put it on this side. We'll say 14 to 50. Right? So if an amount is owed to SARS, it is a liability. If it is owed, if SARS owes us the money, therefore it is on the input side. Okay, so let's go through this quickly. Merchandise purchase, expenses paid. So we've purchased merchandise. So if merchandise is purchased, which means the goods are flowing inwards, which means I'm allowed to claim from SARS, and therefore we put it on the input side. And how do we calculate it? We will then say, we'll do our calculation here on the side quickly. We'll say 225720 minus 198, and the calculator should give us 225720 minus 198, and that is 27720. So we'll have 27720 over here. Now remember, people, the input side, like I said, the rule that I said at the beginning I'm going to work with is the goods coming in or is the goods going out. I've purchased merchandise, the goods are coming in, therefore it is on the input side. SARS also says the following: any expenses incurred in the business for the purpose of running the business, you're allowed to claim it back. Okay, remember that. Goods taken by the owner for personal use. Again, where is the goods going in or goods going out? If goods are taken by the owner for personal use, goods are going out, it will therefore form part of my VAT output and be put on my output side. So I'll put there, they give me the VAT amount, I don't need to work it out. 2940. Perfect. Returns by debtors. Again, return by debtors. When my debtors return goods, is the money going in or is the money going out? Oh, sorry, not the money, the goods. Sorry, again, I said we look at the goods flow. Is the goods going in or is the goods going out? So if I have return by debtors, meaning my debtors are bringing my goods back, which means the goods is coming in, it will therefore go on the input side, and they give us the VAT amount there, 1120. So simple. We always look which side is the goods flowing. Is the goods coming in or is the goods going out? And then we put it on that side. However, if we ask ourselves if the transaction doesn't answer if the goods is flowing in or going out, we will look at the originating transaction. Right. This brings us to the next one. Debtors accounts written off. So they give us a debtors accounts written off, but we don't know if it's input or output because there isn't goods flowing anywhere. This is where I go to the originating transaction and I ask myself the following question. Right. What had to be the originating transaction for debtors accounts to be written off? What did debtors have to do first before an account could be written off? They first had to purchase. Right? So a debtor first has to purchase, and then he owes you the money, then he can't pay you anymore, and then you write it off. So the originating transaction, a purchase had to take place. So when the person purchased or when the debtors purchased, you originally put it on the output side at the time of the purchase. So Saul says the following: you've already paid, you've already paid for the output. You've already paid SARS the output. You need to now reverse the transaction. So therefore, it must go on the input side. So what we're going to do now is we are going to say 9,500 times it's an amount excluding VAT. So I want the VAT amount. So I want the 14 over the 100 because an amount excluding VAT is the 100%. I put in my calculator out, 9,500 times 14 divided by 100, 1330. So I get 1330. That brings us to the next one, total sales. When I make a sale, I ask myself the question, First, is my goods flowing in or out? So when I make a sale, obviously debtors are buying from me or customers are buying from me. Therefore, my goods is going out. So therefore, it will go on the output side. So what I'll be doing now is I'll say 332880. So they give me an amount including VAT, which means they give me an amount that's equal to 114%. Remember, I said 14% for the purpose of this exercise. We'll then say, so we want the 14 over the 114. So we'll say 332880 times 14 over 114. Take out our calculators. We'll say 332880 times 14 divided by 114, and we'll get 4880. 4880. 4880. We'll get here 4880. So now that we've done, well, now that we've completed this part, we need to now calculate. Basically, we need to balance the account out. So we just want to make sure this is right, that's right, that's right, that's right, that's right, and that's right. So we need to basically balance the account out now. Okay. So we need to say, so both sides is equal to 58070. 58070. The shortfall is on this side, which is 27,900, and you always carry it over to the opposite side, which is 27,900. It again falls on the credit side, which makes this a payable. So a payable of 27,900 is payable to SARS. Before we end quickly, I just want to make a note that basically I gave you guys like what a good understanding about the input and output, goods flow in, goods flowing out. If you can't answer that, you go to the regional transaction and see what happened there. But if you obviously have a better method or an easier method, you're most welcome to use that method. This is just something that I thought would help, and that's a cover for inventory, specific identification, and value added tax. Over to Fasih.
Faisal, I want to say a big shukran to you for joining us once again, of course, with the paper one, session two of accounting. And if
For
people
paper
want to
two,
get a
sorry.
sorry, paper
That,
two of
this is paper two, yes, sorry, I forgot to
okay,
mention.
not a problem. Paper two of accounting, and of course, if you want to get a hold of Faisal, you can give him an email on his Faisal. If you maybe might want to read out your email as I try and
Yes,
get it here.
so you can get hold of me on fzlibrahim@gmail.com. You can also get hold of me on 0766 137047. You're most welcome to WhatsApp me, and we can take it from there.
That email fzlibrahim at gmail.com. Shukran so much. All the best and stay safe, sir. Well, from myself, Mohammed Fasih Peterson, that has been our matric revision session for today, focusing on accounting, paper two. And we look forward to our next session as we go through the various stages and various portions of the paper for accounting. And of course, also all the other subjects. You're welcome to check out the sessions on Facebook and YouTube that remain up there. From myself, Mohammed Fasih Peterson, I bid you wassalamu alaikum wa rahmatullahi wa barakatuh, and have a safe day further.